Things have been pretty quiet in the NFT space over the last 12 months, with collections trending down in price, online interest moving elsewhere, and monetary policy around the world tightening. Even I've had difficulty keeping on the pulse of what's going on with NFTs. It's easy to write off a new collection or innovation as dead on arrival in this environment, and for that reason I think that most people who are involved casually have moved on. With that in mind, are NFTs gone for good, replaced by the newest fad? AI. Or are NFTs going to come back with a vengeance in the future? I'm going to give 7 different reasons for each side so you can form your own opinion on the matter. The first reason that NFTs are dead is a pretty big one, and that's that most NFTs are down 80 to 90% in price from their highs in 2021. Bored Apes were trading at their highs in late 2021 at around, $400,000 at a bare minimum. And to look now and see them trading for just around 6 figures, that's pretty rough. I mean, taking a 75% haircut. I mean, there have been a lot of stocks in this environment, especially in the tech sector, that have done that. But you never want to see that with something that you're holding long term. And I think that a lot of people are discouraged by this dramatic fall in price. Realistically, you're supposed to buy low, sell high, right? But most people don't think like from an investor mindset. They try to look at it from like a herd mentality of like, oh, well, if this is down a whole lot, then there must be a really good reason for that. And in some cases there are. There are a lot of NFT collections that are down more than 90%, and they're often ones that either didn't deliver on the promises that they set out to kind of achieve, or they just ripped off their fans and left with the money. Psychologically, this is playing on a lot of people's minds in a pretty negative manner. For the first reason why NFTs aren't dying, that the Bored Apes are still worth 6 figures even after this consolidation period. The fact that a picture of a monkey is worth $100,000 should say something. I mean, it's clearly not dead, or they would be worth nothing. The flagship of the NFT space, at least right now, in most people's minds, is the Bored Ape Yacht Club. And they're still worth quite a bit, even more than they were in most of 2021. And so that should say something. The fact that we are holding like a pretty steady price in the 6-figure range, even if we're not seeing a whole lot of new inflows into the space in terms of capital or new interest from new people. I mean, the people that are here is definitely still invested. And that to me is a really strong reason for why NFTs are still alive, is that, something could still be worth $100,000 for a picture of a monkey and people find value in it. The next reason that NFTs are dead is that the search volume for NFTs on Google Analytics trends is extremely low. And if you haven't seen this graph before, here it is now. And you can see just how much the trends have actually dropped off recently in the search volume for the word NFTs. I don't know that this is necessarily representative of the whole picture of, how much interest there is in NFTs, because in my opinion, once you start in the NFT space and you get familiar with some of the tools that you should use in order to actually access these NFTs, you're not really going to Google and typing in the word NFTs. And while obviously it's really bad that we don't have an inflow of new people into the space that are, interested in NFTs, it's also, not as big of a deal as, I think people are making it out to be. There have been some wild headlines recently saying how NFTs are dead because of these search volumes being so low. I think if you're going to make a case for NFTs being dead and gone, it's not going to be search volumes alone. I think that the search volumes, while they play a role, it's not representative of the entire ecosystem. And really what not enough new people coming in does to an NFT collection is it means that it's essentially being traded back and forth by the same people. In the short term, that can work. In the long term, that kind of starves them of capital with which to actually add more utility to certain NFTs, especially for like Web3 gaming, whereas creating a video game is very capital intensive, and so they need to have enough funds in order to actually fund that development for like a large team of people. And if you're unfamiliar with Web3 gaming, I do talk a lot about it on my channel, but essentially what it is taking these NFTs and using them to represent items in a video game, or some kind of characteristics or traits that would benefit from being on a public ledger that is easily accessible and allows like true ownership of these assets to the players of a game. And personally, that's where I think the most utility is for NFTs as a whole right now. The next reason why NFTs are thriving, and this is a big one in my opinion, but NFT lending through Blend. And if you're not familiar with what this is, Blend is a new program announced from Blur, who is one of the biggest NFT marketplaces currently. And this NFT lending program allows you to take, at first, an initially very small number of collections. I believe there's 3 that are eligible for this blend lending program. Have buy now, pay later for NFTs, which I think is not good for the people that are using it, because in general, I think buy now, pay later is kind of a scam to get you to spend more money than you might otherwise be, should be spending on stuff. And so for a consumer, it's not great. But for getting capital into the space and allowing like more liquidity and transfers of money, it's really good. And we have easier ways to pay for these things and get leverage essentially and lend out these NFTs to other people who might want them. And so I think that this is a really big development in the NFT space, because one of the really big problems with NFTs thus far have been just the lack of liquidity. Because, I mean, if you think about it, there's also only a certain number of buyers for these NFTs, and it's very difficult to like appraise them. It's kind of like real estate. So you have to like go and look at each individual NFT and kind of put a price on it based on its characteristics or attributes that delineate it from other NFTs in that collection. Even collections in general, you have to weigh those against other collections that might be better. It's very difficult to, kind of figure out where things should be priced with such low liquidity. And what this does is it brings in a lot more liquidity, a lot of ease of use of transfer through lending. And I think that it's going to completely revolutionize the space, especially in the next bull run, when we start to see some more liquidity pour back in. This is just gonna compound. The third reason that NFTs are dead is that people who were already skeptical of NFTs to begin with are now getting every confirmation that they wanted to see. The fact that the search volume is so low, meaning that there aren't a whole lot of newcomers to the space, the fact that the prices have all depreciated, in the realm of 75% or more, most cases, up to 90%. All of the scams in crypto that we've seen over the last year and a half, like FTX collapsing and, all these bankruptcies at these various centralized exchanges. I mean, there's not a lot of faith in crypto right now, and it is at a very low point in the sentiment. And even a lot of crypto veterans I know are really disappointed with the space right now, really disenfranchised. And so I think that all of this negative sentiment is kind of welling up all at once, and people are just walking away. And in a lot of cases, I mean, that is a really big reason why NFTs are dying right now, is that just there's not a whole lot of interest in the space, and we're seeing these new developments coming out, but they're essentially just dead on arrival because nobody believes in them. The third reason why NFTs are thriving right now is that there are tons of new functionality pieces being created every single day. So things like ordinals for the Bitcoin ecosystem, which are essentially just Bitcoin NFTs. And if you didn't know about that, I wouldn't blame you, because honestly, there hasn't been a whole lot of news outside of the Bitcoin ecosystem for ordinals. There's also been BRC20s, while we're on the topic of Bitcoin, which is just kind of the nomenclature around what are essentially Bitcoin tokens that are derivatives of this ordinal protocol. And it's pretty cool. It allows them to just have Bitcoin meme coins, something like, what Dogecoin is to the Ethereum ecosystem. You can now have that kind of stuff on Bitcoin. And it's nice in the fact that, the Bitcoin ecosystem is evolving a little bit, even though the actual Bitcoin protocol is not. It caters to different parties there, but it is nice to see that there's some work being done. Personally, I don't really like Bitcoin. I just think that, the amount of energy that goes into the system is kind of unacceptable, but it is, a good store of value if that's what you're looking for. It is not a good currency still. I mean, the Lightning Network is trying to alleviate some of that stuff, but I'm getting way too into the weeds here on this. Essentially, there's way more functionality now for Bitcoin than there was even a year ago. And that's true for all the tokens in the ecosystem and a lot of NFT projects as well. Like we just talked about NFT lending with Blend, but even Blur didn't exist a year ago. Blur has now kind of like really taken the NFT space by storm as one of the better marketplaces. I mean, OpenSea was the reigning champion for a while, but Blur came in with like very low royalty collections, in most cases no royalties that they were collecting, and kind of pushed for a lot of competition with OpenSea and really created the first big competitor. And so there's all these cool developments and new functionality pieces coming out that we are just now like starting to see that were promised like in the 2021 bull run in a lot of instances. So the fact that these things are now coming to fruition and we're seeing some of these promises that were made come true is a really big deal. I mean, Ethereum has gone through several upgrades just as a network. Everything being so depressed in the markets, it's very difficult for, you know, these new pieces of functionality to get the limelight that they deserve. And that's actually very cyclical for crypto. This happens quite a bit. Every cycle there's a bull run. I mean, all you hear about is all the new functionality pieces that are upcoming. And then every cycle in a bear run, it's called the build season, where everybody just builds out this functionality, it comes out, and then you don't hear about it until the next bull run when everybody's like, oh my God, look at all this functionality that came out. Now we can use that as an excuse to balloon the prices up. The next reason that NFTs are dying, and we touched on this a little bit, but it's the fact that tons of major players in the crypto space have collapsed over the last year. So we're talking Celsius, Voyager Digital, FTX, Gemini, and Genesis Earn. Like, who knows, even Binance or Coinbase could be on the chopping block next. No one is safe in this environment. There's no Federal Reserve of crypto to come in and, you know, kind of print our way out of this or, you know, change monetary policy in order to make this better. I mean, now we're just stuck in a very high interest rate environment compared to where we have been. When $50 billion of money is lost from fraud, I mean, that is a huge deal, and there have been tons of fallout from that in the form of trust loss and just obviously monetary loss. And lots of people are using that as a sign to just avoid crypto altogether, especially in the mainstream space. The fact that I'm even talking about, you know, some of the other players going to collapse here soon, potentially, don't think that that's a good sign for, you know, lots of people who are getting into it the first time to want to put their money into it. I mean, the decentralized space is doing pretty well right now. They aren't really showing signs of weakness, but that's real nerd shit, if I'm going to be honest with you. And so most people aren't going to be getting into decentralized finance. It's very complicated, and you have to be like very well versed in this ecosystem in order to not, you know, mess up and accidentally lose a whole bunch of money, because there are no takebacks and there are no real guidelines in order to kind of make sure that you have a good idea of what you're doing. If you mess up, it's gone. That is not very forgiving for people, and they would rather just put their money into the stock market when it's, you know, relatively low, or bonds, which are yielding 5% right now. The next reason why NFTs are thriving is that there is new competition in the space, which is leading to a better overall user experience. So we brushed on this a little bit ago, but Blur's introduction into the scene and adding in a whole bunch of new competition has created a better user experience for the vast majority of people purchasing NFTs, because now there are really no royalties on either of those platforms that are being taken. And so it's sort of a race to the bottom right now for fees, where they're trying to find new ways to make enough money to survive while getting rid of the competition and trying to secure that market share. And so that is really good for the consumers because it's bringing prices down. Really, the fees and gas fees and all sorts of like extra stuff that you have to pay just to exist in the Ethereum ecosystem, for example, are really crippling. And we've got lots of new solutions for different ways to handle that, or at least, you know, kind of depress it a little bit and make it so that the fees are more manageable, because you can't have somebody, you know, really interested in the space if they only have $10, because they're going to spend $10 in fees just trying to get money to where they need it to be. Not only are we seeing reduced fees, but we're also seeing a lot of concentrated energy on the problems in the crypto space, which in my opinion is primarily the user interfaces and just the different walled gardens that we have. I'm not sure if the walled gardens part is being handled necessarily well. I think we could do better. But as far as like the user interfaces getting better and different ways of tackling problems and solving things like the introduction of scanning for your transactions to see if there's something that might be fraudulent going on, and then making that like a user readable thing instead of having to go through the contract that you're about to sign every single time you make a transaction on the network. You know, it's stuff like that that really makes it a lot better for the users. The next reason that NFTs are dead is because of the restrictive monetary policy that we're seeing around the world. And I do believe that this is for the foreseeable future. So these high bond yields that we're experiencing and high interest rates that have cropped up are really putting a hamper on a lot of speculative assets. And because bond yields are so high, you'd be better off just putting your money with bonds while the yields are much higher than they've been in a very long time. And it's essentially risk-free. The only risk you have is the government defaulting in your area. And so if you're in the United States, that's pretty much zero. I mean, if the government defaults, we've got bigger problems, right? Like there are nukes falling or something. So we've got some issues. If you look at something that has fallen, 80 to 90% in the last year, you might be thinking that it's better off to put your money into these 5% bonds and just take whatever you can get, because money's hard to come by right now. And there's not going to be, in my opinion, a cut in rates at least for a little while, maybe even up to 2 years. It really just depends on, if we have broken something here, because core CPI does not appear to be coming down, at least in the United States. The Federal Reserve might decide that they need to bring up rates even further in order to get there. Now, I think that right now that's priced in that there's a 100% chance that they're going to pause in June. That might actually be a long-term negative thing, because they might have to hike rates further in order to push that inflation down again. I would take this, if you are, into any kind of speculative assets, as a learning period. You can try and figure out, there's all kinds of new tools propping up, and if you still want to be in this space, now is a great time to get your feet wet and learn some new tools. As well as, if you really want to, you can try and invest some of your money for the long term in various areas. However, again, with NFTs, everything is speculation at this point. It's very risky. The next reason that NFTs might be thriving is that new NFT games are releasing soon. And honestly, this, in my opinion, and I'm a little biased, but this is my favorite use for NFTs at the moment. I think that the utility that is provided through games and the new models that this approach allows are really exciting. So you can do all sorts of fun things with NFTs and games, like create a play-to-earn model, which is kind of an extension of free-to-play, where whales in the system, that is people who spend lots of money, instead of, just having these like little free-to-play items that they buy, like skins or cosmetics in a game like Fortnite or League of Legends, now they're spending thousands or potentially hundreds of thousands of dollars in some instances on virtual homes, or like virtual, the most rare dragon slayer sword of all time type deal. Or maybe they're buying equipment for an entire army. The thing that I equate it most to is games like EVE Online, which, while they do this in a localized database, you can't really extract value out of that system like you could in, an NFT game or a what I call Web3 game. In this Web3 gaming ecosystem, nobody can stop me from, trading my NFTs. They're kind of like this Pokemon card. This Pokemon card exists in the game Pokemon, right? Outside of Pokemon, I mean, it's cool, like it looks cool, but it doesn't really do much. You kind of just use this for Pokemon, or maybe some game that uses Pokemon cards in a different way. The fact that this is a physical card means that, once I've paid for it, it's mine and I can do whatever I want with it. Nobody can take this away from me, unless they physically rob me, which would suck. And I like this fat Pikachu, but I don't know if he needs to be in a safe, for example. If I wanted to, I could take this fat Pikachu and lend him to someone and let them borrow him, or maybe we work out some kind of agreement even where they pay me like $1 a week or something to have this fat Pikachu in their deck and they want to use him. Now we can take that philosophy of physical ownership into the internet and actually have access to large amounts of people that at an instant can borrow my fat Pikachu if they want. And so I think that ability of combining, kind of the physical aspect of ownership with the internet and the vast distribution networks that come along with it is really powerful. And we're going to see a whole lot of new online economies evolve from people that are really interested in playing these video games and being the best at them. I think once we start seeing NFT games that are really, really good come out, that's when everyone's opinions are going to change on them, because these economies are going to just suck up money very fast from people, because I think that they're going to be so engaging and people are going to want to like actually try to be the best, or really try to compete on a high level. And we're already seeing that with some games. Like I like to equate Splinterlands to that, but it's not really got the mass appeal that I think that we would need to see kind of a change in perception. But there are some games that are coming out in the very near term future that are going to be just completely different than what we've seen thus far. The level of quality and polish that are going into them thus far seems amazing. And I can't wait to see more of these games and what comes out of it here in the near term future. The sixth reason that NFTs are dying is that US regulators are currently pushing crypto out of the country. What I don't like about the way that the United States has handled regulation of crypto is that they have really tried to do everything they can in their power to be ambiguous and not give clear delineation over what is and isn't acceptable. If you want a draconic, implementation of regulation for this space, that's fine. I would just like to see actual legislature come out and have guidelines, because I don't even know if, like, for my taxes, if something is necessarily going to be counted as capital gains or income. Like, there's no clear delineation for just the basic things when it comes to, like, what happens when I sell an NFT, for example. So there are some guidelines for these things, but because the space is so vast and quickly evolving, I really feel like they are not doing a good job of, giving us guidelines and trying to protect the consumer, because it seems to me like they're more interested in, punishing Kim Kardashian than they are protecting people from FTX, for example. I think that we need regulation for crypto. Don't get me wrong. I'm not trying to say that this is a space that is totally fine the way it is. It's definitely not. We've seen a whole bunch of scams and, all kinds of fraud. So regulation is going to be good for the space. I just think that the way that the SEC is handling this is going to push a lot of industry out of the country, and it already is. We're seeing that Coinbase has set up a branch in the Bahamas in order to set up a perpetuals trading option for people that are outside of the United States, because that is something that is not allowed here. Perpetuals are essentially just, trading contracts that allow you to get leverage, and you can hop in and out whenever you want. There's no expiration date. So it's a pretty cool product. I wish that we could use it. Coinbase feels that they have to leave in order to actually get around this regulation that we're about to see. Regulation is doing a really good job at punishing crypto firms right now, and I would like to see just some more clear guidelines around, what is and isn't acceptable in the United States going forward, because at this point, it's been years and they just haven't done anything except hand out lawsuits after the fact of these things happening. The next reason that NFTs might be thriving is that crypto degens are making bank right now on meme coins. Historically, what happens is, the base crypto coins rise, so like Bitcoin and Ethereum, really the stable crypto assets. None of them are stable, but the more traditional crypto assets rise, and then people take profits out of those and kind of try to take it into meme coins and make like 27,000%, returns on their money and things like that. They chase these crazy ROIs. And then once these meme coins run up a whole bunch, they try to look for another speculative asset to make similar returns with. And that tends to be NFTs. So we are kind of next in line for receiving a cash infusion from a bunch of crazy speculative traders that want to make even more profits. And that could be really good for getting some attention, at least in the short term. And I think that, a little bit of short-term, life breathed into the space would have a lot of benefit in the long term, because there are some really struggling companies right now that could use a little bit of the cash infusion to try and make it another year of development. And I'm excited to, get some potential interest back in NFTs. Maybe I could start trading them again, because really there hasn't been a whole lot of reason to trade NFTs with how speculative and risky it is right now. There haven't been a whole lot of profits to pay out for that risk to reward. The final reason that NFTs are dying is that most people were against the overhyped fad NFTs that were pushed by celebrities, at least in the mainstream media. I know that when Jimmy Fallon and Ariana Grande were on stage, very awkwardly kind of shilling their Bored Ape NFTs, that was one of the I think that was the high point, actually. It was around the time that the Bored Apes hit their peak, which is funny. It's like when Elon went on to shill Dogecoin on Saturday Night Live. I feel like that's when we hit terminal velocity, right? So, and you know, there's a lot of controversy around that specific event too, because it seems like they were provided these NFTs from MoonPay, which is a payment provider. You know, they didn't even necessarily buy these things. They were just kind of given them and told to shill them. So that's a little shady. You know, maybe these people at MoonPay had Bored Apes and they were trying to pump up the price of them by getting in front of a bunch of people. And, you know, that's not necessarily okay. So this kind of negative stigma that NFTs have right now is primarily driven by the lack of information and clarity around what they are, because they are so rapidly evolving. The technology is so young. It really hasn't found like a home yet, like a really good place for the utility that they provide. A lot of people in the mainstream media have just written off NFTs as weird monkey pictures, and all of those things are technically true. I mean, I think that the potential for NFTs is much more than that. And we've seen Bored Apes even do lots of really cool stuff in the space as far as like creating games and like, you know, creating all sorts of things around their IP. And personally, like, I don't think that that's going to be the direction that NFTs go in forever. And I think that we're going to lean into some of the more utility focused aspects of NFTs, like allowing it to track the deed to your house, or, you know, using it as a sword in a video game or a Pokemon card or something like that. The last reason that NFTs might be thriving is that the bank collapses in the traditional finance sector have caused a run on crypto. And I don't think that we're necessarily over with the bank runs either. At the time of this recording, PacWest Bancorp is, you know, potentially exploring a sale. Several other regional banks are being speculated to be on the brink of collapse or on the brink of collapse. The fact that we've had 3 of the 4 biggest bank collapses in United States history in the last 3 months, and that there might even be more, is a really bad sign. That is causing lots of people to run to crypto as a safe haven, because Bitcoin was created out of the 2008 recession as a way to get away from money printing and what happened with the banks then and those bank collapses. And the prices have really gone up substantially because of these bank collapses, and we're holding decent levels now for the first time in a while. I think that as more of these banks collapse, you're going to continue to see spikes in crypto, and that could lead to some long-term systemic interest in the space as more and more people try to use it as a safe haven. You know, I don't necessarily think that these bank collapses are the harbinger of doom for the market. I do think that they're obviously bad, and the fact that the taxpayers are eventually going to have to foot the bill for higher FDIC funds and rates. Depositors at banks and taxpayers are the same people. Hate to break it to you, but most people in America have a bank. And so these bank collapses are definitely not good. It is healthy to have some level of bank collapse, just from the standpoint of threshing the chaff, so to speak, and getting rid of some of the bad players. However, these regional banks play a really big part in lending, and the fact that we are seeing a lot of these collapses that are really large at very similar times, because we've had this historic rise in interest rates causing a run on crypto, is actually nice for crypto. So another feather in the cap for NFTs right now. Really, in my opinion, we've just seen a consolidation in the space into the top performers, just like we have in other markets as monetary policy tightens globally. While volumes are down unilaterally, we're seeing the standard building phase that have marked crypto downturns in the past come to fruition in the NFT space. If you don't believe me, check out this video on screen now to see some of the most exciting upcoming Web3 projects that I'm buying NFTs for. Thanks, I'll catch you in the next one.